Welcome, and here we're looking at the US T-bonds, Treasury bonds, and on a daily chart. And I just want to point out a few things here in relation to the indices as such. The move down from the high here on the daily appears to be in 5 waves, so we would be looking for an ABC retracement here, pulling back to the 61.8%. Now, it's already pulled back to the 50% retracement level. And if that's the case, then we would be looking at another 5 waves down as such, like from here, as such here. Now the bonds here will be doing the opposite to the S&P 500. So if we look at the S&P 500 here, coming into this Feb low here of February the 4th here, we can see that it's trended up here. And if we look at the Treasury, well, actually these are Treasury notes, this particular one, but we'll come back to the bonds in a minute. But the bonds and the notes are same thing, rather. Well, technically, anyway, I won't go into that right now. But you can see that from the 4th of February, it's been moving down through here, where the stocks have been moving up from here, from the 4th here. So if we consider that they they move in opposites to each other in a normal flow, that they would, but over the last since the GFTs and bond buying and all these sort of things have changed a little bit, but they'll swing back in, and that's the case now. So if this pushes down, what I'm trying to say, if this is an AB, if this is 5 waves down here, and this is going to move down here further, it's going to strengthen the stock. So we could see even higher ground to come yet as well. That said, this is the 2-hour chart for the bonds here, and I was counting this down in 1, 2, 3, 4, and 5 here, so getting an impulse wave down here in 5 waves, and then looking for the A, the B, and the C here. And this may not be finished here. This is the 50% retracement level and the 60 here, so there can be a little push up through to here. But then, taking out this low here would see stronger stock prices. So just keep that in mind if you're trading. It's possible that this could be an ABC correction. And when I look at the notes, this is why I was pulling the notes up before, it's kind of a clearer 3-wave structure, but it's not quite the case either, because we've still got down for 1, back for 2, down for 3, 4, and 5. So once again, this low here, while this market is above this previous low here, then this market is strong, and that's the same. The note's the same for the bonds as well here. So it's just a little thing that that you can sort of keep an eye on, as such. Now, moving on to the S&P 500 as such, we're still on the same track here. We're still looking for 5 waves up here, and we're counting them, and there's still a little bit more to go here, and we'll look at that. Once that's complete, we'll look for an ABC correction. Now, the 50-60% retracement level is just below the 1800 here, but let's just sort of focus on this little level up, this wave count at the top here. So on the 4-hour chart, we're looking for 1, 2, 3, 4, and 5 up here. Now, in this 5th wave here, there will also be 5 waves as well, and we're at number 4 here, and we'll be looking up for 5 here. The 1850, maybe even up to the 1858 or 1855, or 1856 is always a good number as well. But in there somewhere, and then we'll look for an ABC. Now, the ABC here could be quite shallow into the 1820 there, where there's nice support, move up from there, or it might extend all the way down to the 50 and 60% retracement level. It's probably likely to have more of a shallow retracement level, but we'll count this structure as it comes down. It'll be because it's a wave 2. It will be rather simple. It will be 5 waves, 3 waves, and 5 waves. So that's one good thing. So let's just drill into this little section here. And this is the same for most markets, most indices. So we're looking from wave 4 here. We're looking for 1, 2, and then 1, 2, 3, 4, 5. And this is 3rd wave, fits quite nicely because it's the 162 extension of wave 1 here to get wave 3. So that's fine. So wave 4 here, and be looking up for little 5-wave structure up here, which should be roughly the same size as wave 1 here, or thereabouts. So We'll just drill in there a bit further. So this is the little wave 4 here on the blue. I'll just go back to keep it. So this wave 4 here in blue is this wave 4 here, and we'll be looking up for 1, back for 2 here, third wave up, fourth and fifth here. Now, how far this goes, I'm not sure, but you can build in on the 1840 and add on top of group 1, which will be the 1843, and add on to the 1845. Profit taking at 1848 and 1850 is a target there, even though it can go higher. But you know, don't count on it. But so we're looking for a completion here. So we should see Thursday, you know, give us a bit of a turn in the markets. Actually, it's the 19th. Sorry about that. I was just checking on other cycles, and that seems to fit as well. So that's there. Look, the DJ is the same as well. Nice clear wave structure here in blue. So blue's the same structure as the other one. So up for 1, back for 2, and you can count nice 5 waves up through here, and ABC for the fourth here. The 616.1 is the 38.2 retracement level. Yes, there may be a move down here further, but probably not. The 16.150 as a retested support would be the long trade here, and looking up through here. And because the extension's in wave 3, then you can look at wave 1 here being the same length to this one over here. So we can pretty much just put this here as such, and then bring this over here and pop that there, and that's where you'd be looking for up there. The other way to do that, of course, is to look at this particular structure here, pulling it back this way and looking at the 162, the 61 up through here. So in both cases, it's about the same anyway. It's just, it all fits in most cases anyway. Look, the DAX and the FTSE are the same as well, long off the 96. Well, 50 is good, 60 is even better, and up into here as well. This move here seems to be corrective, so we should take that high out, but it would have been nice to see in 5 waves in here, and they may be they may be tucked in here in terms of 1, 2, 3, 4, 5 here. So yeah, just look for support on the 96.60, or even better still the group 1 there, the 65. Once it's in there and got support there, then it'll work its way up from that point. FTSE's the same as well. Yesterday we were looking down here, I think. Yes, we talk about trading long all the way up to the 6.8. Look, if you got out at 6.8, that's fine. And yes, it will go higher, but you know, it's in line with the Dow. But you know, don't expect too much. And being at a big number here, it will see some profit taking through here. I'm just counting the structure here now on this one here. The 1, the 2. This is 1, 2, 3, 4, 5 for the third wave, the fourth, and the fifth wave in here. So there's not a lot to be had here, and not a lot to be had here is a little bit like the ASX 200 CFD as well. Look, I may have this green labeling wrong here, and maybe I should have the blue ones here as well, but I just need to sort of sit with that for a while, but it doesn't make any difference. What we are looking for from the 5-3 is 5 waves, the 1, 2, 3, 4, and 5. Now, because of this gap here, there may be, if this gap wasn't there, they'll be stuck to that, and this would be 1, 2, 3, 4, and 5. So it could very likely be that that's the 3 and that's the 4, but not that it makes a lot of difference anyway. And the fifth wave here would be looking for something of this nature here. So somewhere up into the group 1 area up through here. So 20 and 30 up through here. The miners were leading through the European and UK session there. So and a lower US dollars. So I would be looking for the miners to resources to lead this market higher. But as always, check the market depth in BHP and CBA and see what's cooking. You know, see where the orders are sitting. All right. Well, that's it. Cheers.